What's up, everybody? This is the DeFi enthusiast from the Crypto Runners. I hope that you're all doing well. So Bitcoin is a scam, crypto is a scam, but the biggest companies in the world are buying Bitcoin right now. Crypto is a scam and Bitcoin is a scam and all of that is a scam. But, all assets are being tokenized as we're talking about everything. Bitcoin is a scam and all this is a scam while a country is literally using it in these current times in the war as a hedge, but Bitcoin is a scam, right? So, so, so at the time of this recording, guys, 69 Bitcoin is sitting at $69,537. The BTC dominance is at 56.44%, Ethereum 10.4%, and we just got our recent newsletter out. So we have a free version and a paid version. The paid version has a lot more alpha, a lot more information, a lot of deep dives, proper deep dives. So if you want to really, you can join us. You can join us in any way. But if you want the best information, everything covered for you, everything done for you, then join the paid version, guys. So in our newsletter, we talked about we did a deep dive on Dovu. You can't get that in the free version, but it's the infrastructure layer, building the digital rails for environmental assets, and how the tokenization of ecological value through carbon markets, biodiversity credits, and regenerative land data could become one of the most overlooked real world asset narratives in crypto. And so we did a deep dive on that. You guys join our paid version of join Crypto Ronins, and get it. It's not even that expensive, guys. We literally kept it at a price value where you can get the maximum amount of information and get a serious bang for your buck. And of course we did a technical analysis, all of that. But what I am going to cover is the Iran's crypto escape, right? So basically, sometimes the most revealing signals in global finance do not come from central banks or stock markets. In case you guys have been living under a rock, you guys probably know that that the world is pretty much in chaos right now because of the tensions between the United States and Iran. So, and during the latest escalation in the Middle East, the blockchain told a very clear story. Within minutes of the first U.S. and Israeli airstrike hitting Iran, millions of dollars in cryptocurrency began flowing out of Iranian exchanges. This was not a slow reaction. It was instantaneous, a real-time financial migration. Blockchain analytics firms tracking the activity observed a dramatic surge in withdrawals from Iran's largest exchange, Nobitex. Outgoing transactions jumped as much as 700% within minutes of the strike, suggesting users were rushing to move funds away from centralized platforms and into external wallets or overseas exchanges. Data from Chainalysis shows that over $2 million left Iranian exchanges within the first hour, eventually reaching roughly 10.3 million in outflows over the following days. In traditional finance, capital flight takes days. In crypto, it takes minutes. So Iran has quietly built one of the most active crypto ecosystems in the developing world. The country's digital asset economy processed between $8 billion to and $11 billion in transactions during 2025, despite sanctions and banking restrictions. The reason is structural. Iran's banking system operates under heavy international sanctions, limiting access to global financial rails. Crypto provides an alternative layer of liquidity, a system where value can move across borders without relying on traditional institutions. When geopolitical instability spikes, this parallel system activates immediately. The three likely drivers behind the outflows, are citizens protecting their wealth. Ordinary Iranians may be moving funds into self-custody wallets to hedge against currency instability and potential banking restrictions. Their currency, their local currency, has devalued a lot, which is why I keep saying that fiat is one of the biggest traps and scams in the world. Local exchanges may shift funds between wallets or offshore venues to maintain liquidity during market stress. And then some wallets interacting with Iranian exchanges have historical links to infrastructure tied to the Islamic Revolutionary Guard Corps, suggesting that certain transfers could involve state-aligned entities repositioning funds. At this stage, the exact breakdown between these categories remains unclear, but the signal itself is unmistakable. I was reading somewhere, guys, and I cannot confirm this, but from what I know, that the IRGC, for example, they've been mining Bitcoin, and they have one of the largest mining facilities, and they're able to mine Bitcoin at a rate of $1,300 per Bitcoin. which is pretty insane because of the the power that they generate, and the amazing rates that they've kept in the country. It's absolutely phenomenal. And basically, so they are able to accumulate a ton of BTC, and then they dump it in the open markets, to hedge against their crashing currency. And of course, that is a smart move. It's a strategic move, and if that is true, that is pretty insane. But I do know that that I don't know if you've noticed recently, since the United States struck Iran, and they struck some of their main power facilities as well. Um, the hash rate went down, and thus, you probably saw more of a price hike for a little bit, on Bitcoin as well. So could this is just speculation, but it might be possible that because the Iranian regime was not able to, their mining rewards were decreased, and they were not able to dump a lot in the open market at the open rate, which is, Bitcoin's price right now. They were able to mine a lot, and they were able to sell it out in the, in circulation into the markets. Because they were not able to do that, because that decreased, it showed some rebalancing in the price in terms of bullish momentum. But this is just speculation, guys. So what we're witnessing is something much larger than a temporary market reaction. Crypto is functioning as a parallel financial infrastructure during geopolitical shocks. When the banking system becomes uncertain, when sanctions tighten, when conflict escalates, capital searches for mobility, and increasingly that mobility is found on public blockchains. This event reveals an important structural truth about the digital asset ecosystem. Crypto is no longer just a speculative asset class. In certain parts of the world, it has already become financial survival infrastructure. When missiles hit Tehran, the first financial system to react was not the banks, it was the blockchain, and the flows tell that story. So obviously, guys, this is, you guys can get the rest, in our in the paid version of our newsletter. We have a ton of alpha for you guys, and I think you'll be really, really impressed. We do a lot of chain elementals, portfolio analysis, all of that stuff. And you can just check it out. Check out the free version. There's a lot of great stuff there, but the paid version is where the real alpha is. And I think you guys are really going to enjoy it. It's also not at a very, very expensive price point either. It's been designed in a way to give you the best alpha for the best bang for your buck, and to get the most amount of returns, because this is for people that want a structure. They want clarity. They don't have time, basically, to look at the markets and what's going on, especially in such uncertain times. But we do that. We do all that work for you, and it's sort of like a guide. We're, of course, none of it is financial advice, but we're like giving educational content, and we're giving really, really good altcoin deep dives. We've done many, many 100x's for people. One of the examples being one of our earliest calls this time around was Hyperliquid, which we gave in the single digits, and its all-time high was $59.30, and right now it's still sitting at $39.84. I originally called Hype at about $4, and I think people did really well on it, and if they're still holding, it's been overall, it's been performing against the markets, actually, if you think about it. What's really impressive is that this is amazing news. The S&P 500 contract comes to Hyperliquid as tokenization race heats up. Trading the S&P 500 around the clock with leverage on-chain will now be possible after the equity index gave crypto platform Trade XYZ the green light to debut a new derivative contract on Hyperliquid. The perpetual contract will track the S&P 500 and allow non-U.S. investors to gain leverage exposure to the top index 24/7, according to a Wednesday statement. So we believe digitally native investors should demand the institutional quality standards that define our indices, and we are thrilled to work with Trade XYZ to do so. Cameron Drinkwater, Chief Product and Operations Officer at S&P Dow Jones Indices, said in a statement. I think this is absolutely massive. The team of Hyperliquid totally deserve all the success. They have been working at it. They've been grinding at it, and they have delivered a product that really does work very well. I think they are one of the most successful projects of this since last year. Absolutely, absolutely phenomenal work. But we gave it very early, guys, and this is the type of stuff that you're gonna miss out on. And you know, uh, join us, join our newsletter, guys. It's going to help you out, and that's what I genuinely believe, and that's exactly why we do it. We're passionate about what we do. We don't get funded or paid by any people in this space. We speak our mind. Of course, this is startup land. Anything can possibly happen, right? But we still try to provide the best information possible, and this market is very volatile, very crazy. But yeah, it is what it is, and obviously very bullish. We have some clarity now. Credit to Altcoin Daily for this, but this is huge. Check this out.
So, so, so today, I'm pleased to announce that the SEC's persistent failure to provide clarity on this question is over. As we speak, the Commission is implementing a token taxonomy and investment contract interpretation, and you should find that in your inbox or if you look on the website when you get home. Our interpretation, which is grounded in existing law and informed by extensive public input, establishes 4 asset categories that are not deemed to be securities. So digital commodities, digital collectibles, digital tools, and payment stablecoins under the Genius Act. With these categories in place, the interpretation then clarifies that only one crypto asset class remains subject to securities laws, namely digital securities, which are traditional securities that are tokenized. This distinction returns the SEC to its core mission and statutory authority of protecting investors involved in securities transactions. We're not the Securities and Everything Commission anymore. So, thank you.
So guys, this is absolutely massive, right? So if you think about it, now we have some sort of clarity now exactly what is a security and what is a commodity. So the good news is for crypto investors is that most of the cryptos that they were already holding are all commodities. What are securities? Basically, all those tokenized stocks, tokenized that'll be on the blockchain, that'll be traded on the blockchain, things like that will fall under the they will fall under the the securities laws. But Bitcoin, XRP, Chainlink, which we called years ago, and we said it's going to be one of the biggest players. Hedera Hashgraph, the blockchain where Dovu is operating on, and we gave HBAR very, very early to our followers, and people made a lot of money on it. And I still think they're going to make a lot of money on it in the future because it's part of the new financial system. So all of these are not securities, they're commodities. So, and obviously the Clarity Act is about to be passed. It seems like the banks and the crypto exchanges have finally worked out a deal. I hope it's in the favor of the retail market because retail created crypto. Without them, this market is absolutely pointless. I'll be very, very honest here. And, if you look at the price action of Bitcoin, with the whole war situation, guys, a lot of people are actually predicting that, that basically, they're predicting that Bitcoin could go lower, even below $50,000. If the current volatile war conditions continue to escalate further. So just keep an eye. My suggestion is, for the long term. Again, none of this is financial advice, but I would say have 0.1 Bitcoin for the long term. Let's say you wanted to buy Hyperliquid. I would say maybe buy 20% now. Maybe see if there's a dip further, then buy another 20%. And if it goes to a price which was not your intention, then buy maybe 10% and see some retracement. So just be careful. Have your targets, have a clear direction, and same case with Bitcoin, guys. If it goes much lower, it'll be a great spot to buy it. And I would say the same thing for Ethereum as well. So there could be some downturns. So always dollar cost average. Be careful, and of course, only put what you are willing to lose in this market because this market is very uncertain, very volatile, but the gains are monumental. Okay. And this is still early days. A lot of people are already saying that, it's all over. This and that. This market is only sitting at 2.467 trillion, guys, while Paul Atkins and everybody, everybody in the US has talked about everything being tokenized on the blockchain, and Ethereum is definitely the winner for that as well. And if you think about it, that's like hundreds of trillions that are going to be coming into crypto within 5, 6, 7, 8 years. So you're still very early. Okay, do not listen to all the doomers and gloomers. Sometimes things take time, and you got to be patient. You got to create a strategy. And of course, if you want more clarity, if you want a direction, if you want the best information out there, join our newsletter. I believe we give the best information. If you want personal mentorship, we do have a premium mentorship program for that as well, but that's a little bit more pricier. But if you don't want any of that, you just want the information, you want everything done for you, you don't want to do the research, you don't want to do any of that, you just want everything done for you. You want a long-term portfolio, long-term assets, things that could, could give you some really good returns within 6 months to 2 years, to sometimes even 3 years. Then join Crypto Ronins now, guys. I believe we have the best information out there. And of course, this is startup land, so the opportunities are insane and the risk is also high. But we try to still find really, really high quality companies, companies that are truly building to become companies rather than just speculative vaporware. So guys, join us. Subscribe to our newsletter, okay? Just by signing up for free. And of course, if you want the best, you want all of everything in there that we have to offer, which is a ton of alpha, then join the paid version, guys. And it's really not going to cost you that much. We have tried to keep the barrier to entry as minimum as possible so that a lot of people can benefit. And that's because we actually do care about people in the space. We're passionate about what we do. We spend a lot of hours researching, and we want to share all of that with you guys. So this is me, the DeFi enthusiast from the Crypto Ronin, signing out. Be very, very careful, guys, during these weeks. And of course, always DCA into what you believe in, and join Crypto Ronin's down, guys. Great day or night wherever you are, guys. Take care of yourselves, guys. Bye.